I'm here in crypto to make enough passive income to retire, not sell enough crypto for fiat to be comfortable. All this bull crap. Now we're entering into this automatic strategy diversification realm where it's like if you hold assets, if you hold money, if you hold anything of value and it's not making you money, it's literally just wasting your time. It's doing nothing for you. So moving on into this next kind of portion, I want this to be very open and just, anybody that has questions, commentary, what you plan to do, bring it to the table. Let's just talk. Let's really expand our mentality and our way of thinking. The primary reason why I'm bringing this to the table is because I feel like every single time I post about something on X or on YouTube about DeFi and earning yield on digital assets like XRP or like Bitcoin or like any other asset in general that experiences price appreciation and fluctuation to the downside, is this question like, why would you not sell your crypto for profit and pay yourself? And honest to God, to answer that, it really depends on your personal needs, like your personal financial needs, your personal risk tolerance, your personal income. There's so many metrics and mechanics that go into how one is set to react after this next cycle based on your personal situation. So for me, again, this is not to brag or boast, but I already have and make a substantial amount of monthly income, right? So right now, I don't really need price appreciation to experience a lavish lifestyle or to realistically speaking, retire. Like if I kind of wanted to retire right now, I low key kind of could. Not my point. My point is that that might not be the situation that you're in. And so after this next market cycle, if my portfolio goes to 10 million or 15 million or 20 million, to me, that's not really like, that's cool. It'll be cool that it does that, and it'll definitely open the door for more opportunities for me to do things with my capital. But I'm not really going to look at that as something that's like life changing because nothing really changes for me outside of the fact that my capital kind of just appreciates in value and I'll be able to do a little bit more. But for someone who doesn't make more than, $4,000 a month in passive income, a $10 million account could do a lot for you, right? It could do an absolute lot for you. And so again, it really just depends on your personal situation and the scenario that you're going through and living through and your income, your debt, right? I mean, there's so many things that could go into it. For me, I'm debt free, right? So I don't have, I mean, outside of a little bit of money that I owe on one of my real estate properties, which is not a lot, it's like $50,000. It's not really that much. It'll be paid off in probably the next year or two. I don't have any other debt outside of that. So for you, you might have a lot of debt. You might have student loans that you need to pay off. You might have a car loan or a house loan that you pay off. The reason why I don't look at my debt that I owe on my house as debt is because I'm not living in that house. And it's not really, it's not, what's the word I'm looking for? Why am I having a brain fart? It's not,
Liability.
yeah, it's not a liability for me because even though I owe on the house, the mortgage that I have to pay on the house is covered by the rental income that I'm making via the Airbnb rentals plus some. So it's like I cover my mortgage and then at the end of every month, I'm still making passive income. So it's actually an asset for me, even though I owe on the house, right? For you, you might just have a mortgage in a house that you're living in. And so it might be nothing but a liability for you because your house isn't making any passive income for you. And so in the future, after this next bull run, well, if your portfolio only makes you $500,000 after this next bull run and you owe $500,000 on your house, that's a liability. Your goal might be to pay off your debt with your profits and become debt free. Like that might be your goal. So for you, selling your crypto this next cycle might be favorable for you, right? Or whatever the case may be. I'm just trying to paint a scenario where it's like people that say these things, like, why would you sell for crypto? It's not as easy as just saying, well, it's because of this, because everybody's situation differs. So let me kind of just buckle it down and try to get you guys to see what my goal is after this next cycle, regardless of what happens, regardless of what type of price appreciation we see. My bare minimum goal for this next cycle, whatever we're in, whether this cycle happens in the next 3 months or we see massive price appreciation that doesn't happen for another 2 years or 3 years or four, whatever, right? Whenever we see altcoins all across the board, hopefully the ones that we've picked go back to their all-time highs. Just throwing some examples out there. XLM still suppressed from its all-time high. HBAR not even close to its all-time high right now. XDC all-time high at 19 cents, halfway to that right now. So like all these assets, let's just imagine a future in the near term. Even look at metal, all-time high of what, like $1.30 or $1.60. It's trading at 30 cents right now. Imagine metal just going back to its all-time high. My goal, if prices in my portfolio can just go back to their all-time high, is to take enough capital off the table to beat the statistics, to beat the retirement statistics with just crypto passive income. My traditional financial passive income already beats the average statistic. And so I'm looking to double that with just crypto passive income. So, what is that average statistic? If you come over here, you can simply just Google it. What is the average retirement monthly income? Now, obviously, of course, this is going to differ depending on your jurisdiction, but in the United States is what I'm assuming it's giving me the average of. And that's an average of anywhere between $3,900 to $4,600 per month. On the high end, for more high end revenue generating individuals, that's about $7,000 per month. So I averaged that and made it about 5 grand per month. So my goal after this next whatever cycle we're in is to shave enough capital off the top of my portfolio to put it in a money market fund, a fixed income generating stablecoin position, or something that's making at least $5,000 per month in passive income with whatever profits I shave off the table. And that will probably be the only crypto that I sell this next cycle because that's my goal. And so, how much money is that to make $5,000 a month? Considering that now we have access to yield generation strategies that provide double digit yield strategies upwards of 10 to 15%, my goal is to take profit in this next cycle worth about $600,000. So it says here, I just asked the question so you guys have a visual. How much capital invested do you need to make $5,000 per month on an account that is earning 10% annually? The reason why I put 10% as my threshold is because right now on stablecoins on Metal X, you can earn 22%. That is way higher than 10%. Even if this were to fluctuate down, so on and so forth, it's an average of about, I've probably never seen this go below 5% consistently longer than a week. So usually it stays above 10%. You got Coinbase recently announcing lending capabilities for stablecoins where you can earn 10%. You have platforms like BounceBit that is regulated and compliant with regulations and supported by Franklin Templeton that offers fixed rates on USDT of 10%, right? So I'm just showing you guys the average, I personally think, of yield that we're going to be able to get on stable coins or money market funds or so on and so forth is going to be upwards of anywhere between 7 on the high single digit to 10%, double digit, and higher anywhere between 12 to 15% double digit yields on average, right? So with that being said, monthly income goal again is just beating the average statistic. On the low end, it was about 3,500. On the high end, it was about 7,500. I just median that to about $5,000 per month. That's my goal after this next cycle, which is about $60,000 per year. With an annual rate of 10% return, you're going to need about $600,000. Now, my portfolio right now alone could handle that, but my goal after this next cycle is to supersede that by shaving a little bit off the top, right? To equate to $600,000, stick that into hopefully a lending platform. I would prefer to stick it into a lending platform like MetalX so that way I can borrow against this and then go and continue to participate in the DeFi ecosystem with my borrowed assets, paying back that loan while it's generating me that $5,000 a month in passive income minimum, right? So that's my goal after this next cycle, just to be transparent with you guys. I could honestly care less about what any other assets in my portfolio do because I'm invested in crypto for life. Like there's these people that are like so gravitated towards the ideology behind, oh my gosh, when XRP goes to $1,000, I'm going to become rich and I'm going to sell it and this is that and that's going to be it, right? For me, I'm like, I'd rather just lend out my XRP if it ever reaches $1,000, borrow against it in stable coins, and then pay myself with that money or buy myself something nice or whatever the case may be. That makes so much more sense. And then you have those people that are like, well, what if it goes to $1,000 and then retraces? And I'm still like, I don't really care because I'm not here for a one-time fix. I'm not here to just be in crypto when XRP goes to $1,000 or metal goes to $1,000, whatever your favorite asset is, go to set some price number. I'm here to retire. I'm here in crypto to make enough passive income to retire, not sell enough crypto for fiat to be comfortable. So hopefully that makes sense, right? So just to be transparent with you guys, that is my goal after this next cycle. Now, I've covered a list of assets that I would prefer to sell after this next cycle, like HBAR, I have a substantial amount of XDC, I have a substantial amount of Flare, I have a substantial amount of assets like XPR now, I have a substantial amount of where if any of these assets just go back to their all-time high, I will have enough to sell $600,000 worth, shaving a little bit off the top and complete this goal. But I'm not a market maker, and so I can't move those assets myself. So my strategy definitely consists on market cycles and if those assets even do perform well. But my bare minimum goal this next cycle, no matter what, is to at least have $600,000 in an account that's earning a minimum of 10% annually, that's making me $5,000 a month. If I can achieve that, then my goals are achieved for this next whatever cycle we're in. Again, whether that it takes 3 months, 4 months, a year, 2 years, 4 years, doesn't matter. That's my goal. Long term, like I said, I honestly don't plan on selling any of my assets. I plan on sticking my assets in a trust fund, right? And passing those assets over to my kids and taking the passive income from those assets that that trust is making while my kids have access to the long-term holds, right? So that's my goal, right? That's my ideology behind this. Now, this might shift whether I stick it in a money market, whether I do it in stable coins, whether I do it in volatile crypto assets. That could change. But bottom line is that's my mindset and my way of thinking. So again, I'll open the floor and I'd love to hear your guys' thoughts, maybe what your strategies are. Um, yeah, take it away. Open conversation. No need to raise your hand. Just openly speak.
Mine is very similar to yours, bro. The thing is, for me, bear case 150K is my targets. Put that into YLDS stablecoin, any of those other platforms that offer those specific yield rates. If I can get to 3, 4K a month, I'm cool. Anything else, outside of that is great. I mean, if I see my portfolio hit like what 50 million, I put at least 10 million into that, into one of those platforms, and just cool out. And then not necessarily have to sell the other assets I have. I could just lend them out. Obviously, when those capabilities come to a much more mature place, and then borrow against them, like everyone here. But yeah, I really think it depends on when we get into these assets in terms of the points that we invest into them and how much we're actually accumulating over time. I mean, because like you mentioned, everyone's situation is different. I think the more that you have, the more safety and room for error that you give to yourself, if that makes sense.
Yeah, it does. You know what else too? Something that in watching all of these panel discussions that I've seen recently, one of the things that I've seen mentioned is that in the future, people are going to be, so we're heading into this wallet-based future where, and this is coming directly from Sandy Cole. There's three panel discussions that I've watched her been on, and she reiterates the same thing that we're headed into this wallet-based future where every asset, everything is going to generate yield. your real estate portfolio, your stock portfolio, your crypto portfolio, your stablecoin portfolio. You're going to have a money market fund. You're going to have all these things, and it's going to be in one direct wallet and interface. We're headed into that future. So even if you're the type of person, and it's not a bad mindset to have that thinks that you're going to be successful selling for fiat currency in the future, at least think this way. If you do sell, let's say, for example, XRP, and I just constantly use XRP because I'm pretty sure everybody in this community holds it, right? So I just use that as an example. But let's say XRP does go to $1,000 in the future and you sell for hopefully stable coins. Understand that whatever profit you take out of the market doesn't have to be removed from crypto. So if you do sell $50 million worth of profit in the future, you need to have a plan on what you want to do with that $50 million so that the $50 million itself is not what you use for your expenses or to buy things like properties or nice cars or take your wife out or your husband out or whatever. Your goal should be with the profit that you take when XRP goes to $1,000 to get that capital working for you, live off of the rewards of that profit, or borrow against after lending out that profit to do what you need to do with personal expenses, debt repayments, whatever the case may be. So, like, for example, just imagine you have two people. They both invested in, I don't know, 50,000 tokens of XRP at the same exact price at the same exact time. And in the future, XRP goes to $1,000. One person sells, what is that, $50 million. One person sells for $50 million, turns all their XRP into fiat, sends that fiat to their bank account. I don't think that this will exist in the future, but that bank account, obviously, of course, is earning absolutely no interest in nothing. And every single day they go out, they go to Morocco, they spend that $50 million. They go to Maldives, they spend that $50 million. They go buy a house for $1 million. They go buy their nice Ferrari for $100,000 or $200,000 or whatever. And their capital is just constantly depreciating. While at the same time, because they're in fiat currency, I don't know what the future is going to look like, but I'm assuming that fiat currency is going to continue to depreciate in value in the future as well. It's always depreciating and declining in value. Why have that mindset when the other person, again, that both invested in XRP at the same price, 50,000 units, makes $50 million, pulls profit, takes that $50 million and goes and lends it out on a platform like MetalX Lending or lends it out on Coinbase. And then they can borrow 75% against that $50 million. Now that $50 million is earning whatever yield it's earning per annum on MetalX or on Coinbase, in Coinbase's case, 10%. You do the math of what 10% per year is on 50 million freaking dollars. So while the other person is constantly spending their $50 million, the other person holds on to that $50 million while it's earning yield. Hopefully, they're compounding that yield on top of their $50 million or paying themselves, but then they borrow against that $50 million to do all the same stuff that the person over here that's spending the actual $50 million is doing. Who's going to be the more successful person, right? D'Angelo said nonstop cheat code. I can't, like, I don't get why people don't see it. That's besides the point, but there are still people like that exist. And I don't want to see anybody in this community get wrecked when price appreciation really comes that hasn't thought about these strategies. So start to think about these things, even if, again, when we're sitting here talking about millions because of mine, Aqua's, and Kevin's portfolio size, right? You guys don't have to become millionaires to achieve financial freedom, right? Like, even if you have a five-figure portfolio right now, it could turn into multiple six figures this next cycle. How are you going to turn that six figures after this next cycle into seven and then hopefully into eight in your lifetime? That's what you should be thinking of, not how can I sell back into the traditional system to just get absolutely fucked. Like, I don't, you know.
Now, I have a question.
Rob, go ahead, brother.
Um, so since we like getting adoptions and regulations, do you really think that, taking profits in whatever we call the bull cycle, even if we get like a bull cycle and retracement, is it going to be that deep? Because institutions going to be using the assets to, keep making yields, so that money it's kind of staying on those assets. So like how how do I approach, taking profits, or if it's even a case that we're gonna have a big pullback?
Okay. Can you package your question so it's a little bit more easily digestible? Because I didn't
Okay,
understand
okay.
it quietly.
Because you're talking about like taking profits, this bull cycle.
Hmm.
What's going in my head right now that we're getting all adoption and regulations. So now in future, we're gonna see um, institutions using those assets. So once they start using it and generating yield, using as a tool, do we really are we really gonna see an outflow as like in a bull cycle? You
No, I
know,
personally don't think we are. I personally think that we're entering into a cycle where if we do see pullbacks or drawdowns, they last for a couple of months, like we saw at the beginning of 2024, like we saw rolling into 2025, that are fundamentally driven, but that every single time the market becomes discounted to these financial institutions that want to enter into the space, they're going to aggressively, and we're going to just continue to see another leg up. Like if you just go look back at the comparison to the total crypto market right now to the stock market, you can see the exact resemblance. There was like a period of time of just uncertainty where everybody thought there was just the crashes, the dot-com bubble, all these things. And then once all that was gone, you go back and you look at the early stock days, the market just literally looks like this. Like if you go back and you look at Amazon stock or Microsoft stock, there was like a period of like 20 years where it was just like consolidation. Well, I can't say 20 years, like 10, 15 years of just consolidation. And then all of a sudden, it's just an upwards trajectory. But then if you zoom in a little bit, you go down from like the monthly to the weekly, you'll notice that in that upwards trajectory, there's these pullbacks where the market found a floor and then created support and then trailed higher. But those pullbacks existed for like 2 or 3 months, 4 months, 5 months. And those were the bear market cycles. That's what I think we're entering in. And I think that people are underestimating that because of what we're used to, the psychology that we've gravitated towards over the past 17 years in crypto. I mean, I know that a lot of people haven't been in crypto for 17 years, but regardless, if you've been here prior to like 2020 or even let's just say 2022, maybe even, you have like this trauma in your head that you like gravitate towards, like, oh my gosh, we're gonna get a crash. And I'm not saying it's not possible because it 110% is. Nobody knows the future. But what's more likely is that any major crash or pullback that comes is going to be very hard to pinpoint and time properly. You have all these people that are like, I'm going to sell at this top, right? And get back in at a discount. Please tell me somebody, the statistics of the average retail trader success in the markets is like 98% of traders can't trade. They can't invest properly. So you have this deluge of all these retail investors that think that they're going to time the market correctly when they can't even read market fundamentals. How idiotic does that sound? So imagine these retail investors that think that the top is in, they sell, and they think they're going to be able to time the market bottom. They're more likely to F up their investment. They're probably going to fumble the ball. They're going to mess up the opportunity. The market's probably going to not do what they wanted it to do or what they expected it to do, what they thought it was going to do, and they're going to miss out. I'd rather be in a position where I don't risk fumbling the ball for my family bloodline and I just deal with the market fluctuations for the next 5 to 10 years, earn yield on my portfolio between now and then, and aim for shit like this, like I just showed you guys. Like I think with the size of my portfolio and the positions that I have, shaving $600,000 off the top is relatively small in my personal opinion on what's going to happen to my portfolio over the next 5 to 10 years. But guess what? I don't risk accidentally getting out of the market at an improper moment in time because I misgauged fundamentals. I misgauged when the top was, when the bottom was, and wasn't able to re-implement my capital or my profit back into the market at a discount. Because you have to remember, greed works in both directions. So all these people that sell at whatever they think the top is, collectively speaking, we just saw a local top because we don't know if the market's going to recover next week, today, in a month. And if you look at the market, right, the total cryptocurrency market just touched $4.1 trillion and now it's back down to 3.8. Who sold? Most likely nobody, right? So that means that proving my point, how many people were unable to misgauge the current local top? Most likely 98% of retail investors are still in their position today. Everybody on this call is most likely in their position still to this day. And so, again, think of yourself in the future. Are you going to be able to gauge when the top is? Most likely not. So, you have to think about strategies that are going to allow you to avoid fumbling that ball by trying to gauge timing of the market, which is something that not a lot of people can do properly, and combat and defend against that, which, in my personal opinion, is through DeFi, is through yield generation strategies, is through constantly adding units of assets to your account instead of value to your account. You're constantly stacking numbers of assets because eventually these assets will appreciate in value. That's the goal. Hopefully that
What
spiel made sense.
it does. One more question. When you're talking about shaving out of your portfolio and you had your, number 600,000, is that 600,000 based on future like a future percentage of the portfolio that's going to come out to 600,000, or 600,000 is your goal no matter what kind of percentage that would be out of your portfolio?
The number 600,000 just comes from the basic principle of a 10% annual a month APY or APR
Yeah,
to
I
make
understand
to
that.
make $5,000.
Um, but is how I can put this together. Let's say I mean, are you going the way as like, okay, in the next bull run, I want to shave like 10-15%, and that's gonna equal kind of $600,000, or your goal is like, I want to shave $600,000, but it might be 30% of your portfolio. Like, which
I see what you're saying right now. I see what you're
yeah.
saying right now. Well, $600,000 right now would be half of my portfolio because my portfolio right now, with the market conditions, is worth about $1.3 million, give or take. So it'll be about half of my portfolio right now. Um, I don't really think anything has anything to do in my mind with percentages. I think it's more so just has to go off of what I'm trying to generate in terms of passive income for myself with stable assets. And so my goal, again, my threshold is $5,000 a month. So whatever I need to do to make that after this next price appreciation, super cycle, whatever it is that we experience, that's my goal. So if I need to sell half of my portfolio because that's where I'm at, then so be it. But I don't think that that's going to be the case. Um, I'd say in terms of where, like, just as an example, right? I have 1.2 million, or it's a little bit less than that now, but I have 1.2 million units of Hbar, right? So if Hbar goes to $1 in just that portion of my portfolio alone, I'll be able to sell, you know, 600,000 units of Hbar to meet that goal. So I won't even have to touch the rest of my portfolio. I could literally just sell half my Hbar and meet that goal. You get what I'm saying? So it's like for me, it's not
Yeah,
about the
I
percentage of
see.
my portfolio. It's more
Yeah,
so about
that's what it's kind of gauging from, because I like, if I would do that, for example, I get $1 million portfolio, but if I have to sell half of it to get that, 500,000, and then like having a risk of like, missing out if if
Hmm.
shit starts picking up, if I
Hmm.
didn't sell too early.
I think too, man. I think too, like, and so it really just depends because, like I said, we don't know what assets are going to perform well. We hope that they all perform well in the future, right? I mean, what if it's not HBAR that performs well in my portfolio? What if it goes over and I'm in XDC and I have like 1.3 million, or maybe I have a little bit more XDC? What if XDC goes to $1? Then I'll shift that strategy mindset over to the XDC portfolio. If XRP goes to $100, then I'll try to achieve my 600,000 goal with my XRP profit. So really, it just kind of depends. Um, and it'll just vary, and I'll have to adjust as the future progresses. I also want to say this as well. I'm not against anybody here, and I just want you guys to make sure that you understand this, selling for just fiat to pay yourself your initial investment. I think that that's a very smart idea. For me personally, just looking at my XRP investment, a lot of my XRP was purchased between the price levels of around 11 to let's say like 27 cents. I don't think I've purchased any substantial amounts of XRP that's currently in my portfolio above those levels that I'm not using for DeFi, right? So most of my XRP was accumulated then, and I have about 100 units of XRP left. I had about 150,000. But when XRP rallied to like $2.55, I shaved off some profits out of that position to pay myself back my initial investment, right? That money's still in crypto. I put that into other assets. I don't remember which ones off the top of my head, but I know that that money still is in my portfolio. But still, regardless, I'm not against that. So if you are going to make that decision, just understand the psychology behind it, right? Understand the greed, always expecting more, and then also on the downside, always expecting more discount. That's where I think a lot of people are going to mess up that do take profits for fiat this next cycle is whenever the market does pull back, if it does, they're going to always want lower prices and they're going to hesitate entering in because they're going to think, just like when the market's experiencing greed and euphoria, that higher prices are going to come, that lower prices are going to come, and they might never. And a lot of people are going to miss out re-entering into the market strategically. And I just personally, I owe it to my kids to get this right. You might not have kids. Like I said, everybody's situation is different, but I owe it to my daughters to change their life financially so they never have to do this that I'm doing. God forbid. Um, and so I'm not going to fumble up that ball just because I want to sell when I think it's time to sell and re-enter. Like that's, in my personal opinion, low key kind of selfish when you got this other route over here. Like literally on stage the other day at Seoul, Korea, they're announcing a freaking infinite money glitch on XRP. And you got people talking about, I want to sell my XRP. Come on now, y'all. What future are we headed into? You know?
Remember when we were back in March, the March, April lows, bro? I don't think like it's going to take a lot to go back to that specific point. And the way people are saying, oh, yeah, if we get back into these lows, it's like, nah, these are slow price outs literally happening right before our eyes. So, this, getting back to this specific point, I mean, if it happens, it happens. But most likely, just given the past, what we've seen these past few months and the evidence so far, it's highly likely not to happen, if that makes sense.
Yeah. And also, too, though, to go off of what you're saying, D'Angelo, hold on. It's like, I see what you're saying, but also too, bro, like look at altcoins. A lot of altcoins across the board are at lows that we saw back in those days. So it's like what are people expecting? People are like, "Oh, but we're going to enter into a bear market cycle and prices are going to pull back." Yo, go look at XLR right now. XLR is literally trading at 31 cents, which is lower than its low back in, let's see when this was, which is lower back than when it was in 2023, right? And go look at everything that they've been doing. They just recently announced just the other day this MXRP partnership, right? Like I don't get it. I just truly don't get it. So people are like, "Oh, the market's in a bear cycle." What the heck are you talking about? Like look at this. We're already here. This is markets have already bled. And now, for the first time ever, we're seeing all these institutional. It's almost like people are being fooled. People are being fooled to think that we're going to continue to see substantial price depreciation, which I'm not knocking. It could happen. We could see prices bleed lower, and I'll just scoop up those discounts even more. But like, I just, over the next 5 years, don't see nothing but upside, in my personal opinion. Like, I'll give you another one. Look at red, right? Red recently, Red recently was trading at freaking 25 cents and everybody was ignoring it. It rallied all the way up, surpassing a freaking dollar. If you go look at one of their recent announcements, even just today, they're the Oracle provider for this partnership with Ripple and BlackRock and Securitize. They're the ones providing oracles for that whole entire scenario. They're also just recently partnered with Credora, and the announcement with Credora specifically states that now, for the first time ever using Red Oracles, they're able to price accurate data and risk analytics for institutions to use DeFi for the first time ever in history. So that literally to me screams that whatever the fuck Aave's been doing or whatever other DeFi platforms have been doing using Chainlink and Pyth haven't been doing it properly. And now moving forward after that announcement, which was only 2 weeks ago, now we have the future of where all of this is going to be enabled for institutions. What does that look like? Nobody knows. But for some reason, everybody thinks it's going to be bearish. What? I don't get it.
There was there's a panel discussion on a BIS Innovation Summit. It might have been last year with the CIO of Swift, and he was talking about like the process of integration. And basically, he said there will be no flip of the switch moment. Like these things take time, and institutions and those kind of parties, like just like you're telling us, they're gonna layer their way in. And to circle back to Rob, I think the other part as well is everyone's portfolio is different. And I think what helps in the profit taking is actually having bigger bags of certain assets. Because if we have a lot of everything, but we're not heavily weighted in something, for me, that's a harder decision on when to sell. But if we have a heavy weighting in a particular asset and that appreciates, that's an easier let go of taking profit.
Yeah,
Just to kind of
said it better.
narrow the focus. Just to help narrow the focus. And my concern, it's not a concern, it's a good problem to have, is on the lending aspect. Like for me right now, like my DeFi is not at the point yet where it can replace my income. That's still growing passively. So for me, if a price were to appreciate and then I were to borrow against it, my question is, do you ever plan on paying your loan back? Obviously, you're going to pay the interest, but is that something that you plan to pass down? Like the advice you gave with one of the institutions saying, hey, whatever you borrow, take a portion of that and actually use that to pay down the loan. Like that was big for me, because that's my concern is, okay, if I do the borrow, shoot, how am I going to pay this thing back?
Yeah.
Or do I
No.
even need to do that?
Yeah. So I always plan on paying the loan back, but also I never plan on borrowing in volatile assets to mitigate the possibility of owing more than you borrowed, right? So that's one. And then two, yeah, absolutely. Borrowing and then using some of the money that you borrowed to pay back your loan is a great plan right off the bat. Also, two, to mitigate your liquidity risks of being exposed in case there is a market pullback, is not ever borrowing the max amount. Borrowing, if you're able to borrow 75%, only borrowing 60% to give yourself that threshold of a cushion so that way you're not liquidated in your loan, right? So yeah, there's definitely a bunch of strategies that we could go about, Neff, right, on that whole entire topic. I definitely think though that, you know, in the future, I personally, I mean, I don't know. For me, it's like because we can stake assets, because we can actually earn on digital assets without having to lend them out, I think that a lot of my passive income in the future is going to be just from the volatile asset itself. Like, let's just go back to the stock market again, right? So, like, we're buying digital assets like metal, okay? Dang, I have a freaking eyelash in my eye. We're buying assets like metal at 39 cents. I mean, I personally believe that in the future, we're going to get to a point in time where the 39-cent floor that might be held on metal now goes to like $5, right? And maybe we see metal go all the way to $20 and maybe it does pull back, but I don't think or see a future where it ever goes back to 39 cents, right? And so just like right now, anybody that holds Amazon stock, even if Amazon stock corrected 60 or 70%, it still wouldn't go back to the people that bought it back in the early days in like the early 2000s. So it's like, and with that passive income that we'll be able to get from metal, from the node, 12% plus any additional earnings that we're getting from people utilizing our node, when price has made a floor above $1, above $2, above $3, above $4, that passive income alone will be motivating me to not have to sell through the price fluctuations because I'll just be earning so much passive income regardless. Am I making sense? It's like if XRP, like XRP, I don't ever see it going back to 27 cents where I bought it at. So it's like if I can earn yield on my XRP and it's always above 27 cents, then I'm always in profit and I'm always earning yield. Why would I want to sell that asset? It's like the same thing. Pretty
I was
much,
just about to ask that.
yeah.
If you bought it, if like XPR, if you bought it at what it's at now and it goes to $5, $6, why would you sell it if you're making 4% on it?
Even if
So
it,
I mean,
even if
shave a
it,
little top off, but
yeah, shave a little off the top, but I mean, even if it were to retrace back down to like 50 cents, like you still got in with doubles to triple zeros in front of it. There's no, I don't know. I just don't see myself, like I said, crypto for me is for life. It's not something that I'm just trying to like get a quick trade off of. For me, it's an investment. It's a foundation for myself to build generational wealth. And generational wealth is not going to come from people, unfortunately, that try to sell and time the market. It's just not. Like I can almost say with 110% confidence that the onset of people in crypto that try to time the market by exiting and entering and exiting and entering will be so much less profitable than the people that just have a long-term strategy, maybe shave a little bit off the top, but that do something positive earning wise with that capital and with their portfolio over the next 5 to 10 years. The people that stay in crypto, the people that earn yield and compound, their portfolios will supersede probably 10x times the people that try to gauge and time the market correctly. I actually wish I had like a relationship with somebody that thought that they were going to be able to do that successfully, that like had a similar size portfolio between me so we could like I could like be in competition with them low key and be like, look, you do this over the next 5 to 10 years and I'll do this over the next 5 to 10 years and we'll full circle back and see whose portfolio is bigger, you know.
Yeah, I can vouch for what you're saying. You can hear me, right?
Yeah, of course, Ivory. Go
Okay.
ahead,
All
bro.
right. All right. Just want to make sure that everything wasn't muted. Yeah, I can vouch for that myself. Like just over the years, I got in back in 2018 and screwed it up the first go around because I was just acting on emotions, getting wrecked every time, panic selling because the market dipped and then realizing that was a stupid move and 5 minutes later buying right back in at a loss, just pure emotion. Then 2021, I was like, I'm not doing that again. And I held through the whole thing and rode it all the way down and didn't claim any profit. Um, so this bull run, I'm trying to do things a little different. It's like now I'm at the point where there's a few things that I still need work on. Like I know there are issues that I have, kind of like a smoker who's like, oh, this stuff, I know these cigarettes are bad for me. I need to quit, and then they never quit. They know what they need to do, and that's part of the reason why I was just like, you know what, I'm getting into Wealth 28 because I just need that um
Mindset
well,
shift.
to put it this way, a good friend of mine that actually kind of got me out of the rut and helped me mentally get on the right path. Older gentleman, he told me, he said, hang out with people moving forward and you'll move forward with them. And I kind of thought about it, thinking about some of the people that I was hanging around. And I remember hearing you talk about a point where you just had a crowd of people, they were best friends, but you were like, if I don't get away from this, I'm never going to get out of that mentality. And that kind of struck me too. And things are starting to fall into place and they're really making sense. And I've got the willpower to actually finally break those old habits and start new ones.
Yeah, I
Yeah, that's
think.
all.
Yeah, I think too, though, like put it this way, right? Have you guys ever heard, I think it's Plato's allegory of the cave. You guys know what I'm talking about when I say
Yep,
that?
I do.
Yeah.
Okay, so like long story short, for anybody that doesn't know, okay, imagine you okay, so imagine this family, this group of people, and they were born in a cave. They've never left the cave, and all they know of is life in a cave, in a dark cave, and every once in a month, let's say once a month, somebody opens the door to the cave, and every single time they open the door to the cave, these people are blindfolded. They can't see the light, and they're chained inside the cave so they can never leave, right? And this person comes in and feeds them food, gives them water, closes the door, they're in the cave again for the month. And then, so all of their beliefs, right, are revolved around the cave. What they know, the life that they experience, the taste that they experience, everything, the sounds, everything about their life is just this cave. All of a sudden, something happens, and one person's chains somehow miraculously allow them to break free. And when this person comes to give them food, they escape and they leave the cave for the first time ever. They get outside of the cave and they see sunlight for the first time. They touch grass for the first time. They see butterflies. They see birds. They see all these things that they've never seen before. And they come back to this cave to explain to the people that have never seen outside the cave what they saw. You think that the people inside the cave are going to believe them? No, they're not. And in this allegory, it's the exact same thing in crypto. It's like people believe what they see on social media, they believe what they see on the internet, and they believe that they're going to be able to achieve similar results that other people have achieved that broadcast those results on the internet. And a lot of what's broadcasted on the internet is is what looks like financial success by these influencers, but behind the scenes is actually not financial success by any means, right? And I think that that's going to get a lot of people wrecked. I think that that's going to get a lot of people to believe in something that's never going to come, and a lot of people are undermining what's about to happen. It's like people don't. It's like we're in this realm right now where people are like investing in crypto with this mindset still of I'm going to get rich quick. And instead, they're not realizing like everything that we've known before. So again, we're in this cave where we're in this cave for the longest time with traditional finance, where your money, if you got paid on Fridays and Friday was a holiday, didn't process until Tuesday of the following week. You weren't able to send $10,000 to somebody through Zelle because Zelle only requires or allows you to send 5,000 or $3,000 limits or whatever. You were never able to earn yield on your paycheck every single time that it got deposited because it's deposited every single day that you make money, right? There's all these new things that we're now unlocking that people just aren't mentally being able to comprehend because they're still so fixated on previous cycles that made people successful that are still broadcasted to them, which in previous cycles was selling for fiat, re-entering that fiat into the 4-year market cycle bottom when the market pulled back, and then, building portfolios that way. All that we have to understand is now starting to come to some type of end. When it's going to officially come to an end, we don't have a crystal ball or no, but I'd rather be prepared for a future that is constantly yield generating, that is constantly growing and expanding, and is less active on my behalf to make money than in previous cycles that required your time, that required your attention, that required your active management and rebalancing and all this bull crap. Now we're entering into this automatic strategy diversification realm where it's like if you hold assets, if you hold money, if you hold anything of value and it's not making you money, it's literally just wasting your time. It's doing nothing for you. And it's like people have not For some, you guys on this call, it's clicked. But for most people in crypto, it still hasn't clicked yet. And they still have this like resistance. Like they're still stuck. Like, and it's really just lack of education, honest to God. But once you really realize that everything should be earning you slivers of yield, even if it's like I'll show you, and I'll give you an example. The other day, I went in and I looked at how much Twitter has paid me over the past 3 years or whatever that I've been growing my Twitter account. $42, y'all. That's how much Twitter has paid me over the past couple of years that I've been on Twitter. I have over 45,000 followers on Twitter, guys, and they've paid me 45 bucks. And then I went and I looked at how much money I made on Snips in the past month. $54 on Snips in the past month. And I only have 650 followers. I think 700 now, whatever, right?
Oh shit,
Yeah,
bro.
and I'm like, why on
What?
earth, right? Because you will go out and tell people, you'll go out and tell people, hey, come get on Snips if you post on Twitter, and they still won't go and make a Snips account. It's again because they are so in bed with the old way of doing things that their mindset is not mentally ready for what's about to come. And we cannot in this community be part of that tribe. We have to separate ourselves. And it's going to be tough because we're going to have friends and family members that meet us with that resistance. But eventually we will prevail. We will grind through that resistance, break through that, and we will be the new era of people, the one percenters that awaken everybody else. That's our job right now is to bring everybody else on board and be like, hey, look, dude, if you ain't earning 50 cents a day, you're tripping, you know? And people will be like, well, what's 50 cents a day? Well, excuse me, my friend. That's, $6 a week. That's $6 a week compounds, turns into freaking 24 bucks a month. That 24 bucks a month eventually will turn into 1,000 bucks a year. The year after that will turn into 10,000, so on and so forth. And you have to really get that mindset going. If you look at any successful investor, I think one of the key takeaways from my financial journey over the last 9 years, as I look back at what I thought I was going to accomplish in the early stages of my financial career, trading and investing. And I thought I was going to be a freaking multi millionaire by now. I achieved millionaire status, but what I didn't account for is all the trials and tribulations and all the bullshit that I was going to experience along the way. I lost over $1 million in the past 2 years alone. 2023, I took a $500,000 hit. This year in June, I took another $500,000 hit. I didn't account for that, right? But if it wasn't for yield generation, if it wasn't for my skill set and my mindset and my ability to adapt to changing market conditions, I wouldn't be where I'm at today. And so I encourage you guys to really, truly shift your mindset. That's really all it takes. So I mean, I'm sorry that I got on a tangent there, but yeah, that I support exactly what you said, right? It's just requires a mindset shift and for you not to want to fumble this opportunity, which I believe truly that a lot of people are.